Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about the top undervalued dividend paying stocks. So I hope you guys enjoy it, and if you guys get anything in value out of this video, please repay me with a huge like. It's greatly appreciated. And guys, well done. In my last video, I said if we hit 10 likes, I will drop my course from $35 all the way down to $5 for the course. And yes, I'm dropping the price from $35 all the way to $5. So make sure you guys go ahead and check it out. That'll be the first link down below. $5, you guys can definitely afford that. That is like literally a coffee from Starbucks, but now instead of, wasting your money, you guys are gonna understand how to properly invest in stocks. Can't beat that. So I hope you guys enjoy it. Now that's really the intro. Let's go. I hope you guys enjoy it. Let's go. Bam. Alrighty guys, so now let's jump into it. The very first undervalued dividend paying stock is 3M. Ticker symbol MMM. The stock is trading right around $160. Yes, right now we are on a short-term downward trend. Now, when I ran some analysis, I thought a perfect fair value for this stock is right around $213. That is incorporating all the debt to income, that is incorporating the dividends. So right now you guys are going to be getting paid around $1.47 every single quarter, and it looks like they've slowly increased that dividend payout, which is really, really nice. And another thing that is a little concerning, when looking at this chart, we are technically on that downward trend, and it is using this 200 moving average line as resistance. But as an income investor, really your main concern is dividends and company growth. Right now, the company growth is a little sluggish, but the dividend payout is very, 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 very good. So I think it's definitely something to keep an eye on, especially during this time of uncertainty. Now, the next stock that I think is extremely undervalued is AT&T, ticker symbol T. Right now, the stock is trading right around $28. I do think that a fair value for this stock is right around $31 to about $32 per share. That is kind of that middle ground for this stock. When you guys incorporate the income to debt to price to earnings per share, that's where the fair price or average price for this stock should be. So right now with the payout being right around 52 cents, that brings that dividend yield to right around 7%, which is extremely high for an overall stock. The biggest thing too with investing in these dividend stocks, you're going to be getting some very, very high cash flow. Investing $1,000 into this, you automatically get $70 every single year passive. Not to mention the overall growth of this stock, but overall AT&T been around the block for a very, very long time. The stock really doesn't move too much. It has highs at $40 and lows, right here at 26. So it doesn't move too high. But all right, the overall next one here is RTX, Raytheon Tech. You guys can see that really before the whole recession hit, that this stock was kind of climbing up on a beautiful and strong upward trend, had a very, very strong performance in 2019. But in 2020, this stock did get slammed down all the way down to $56 right now, and all the way down at lows at $44. So that is down right around 56%. And I do think a fair value for this stock is right around $67 per share. So this brings a very, very strong dividend. You guys can see that they did kind of cut their dividend, which is very, very, really nothing to be worried about. Companies cut their dividend when they're worried about cash flow. That's all it is. Once everything kind of carries over, I think that Raytheon Tech is going to be very, very strong, and this stock is easily going to break over that $67 per share. Not to mention, I think that this stock has tremendous long-term potential and really has no signs of issues. So the next stock here is ticker symbol ABBV. You guys can see that there is some resistance here at right around 125, some support definitely at around 63. Right now with this stock kind of climbing down, we've had this beautiful downward trend, and almost every single time that these stocks fall this much, I think it's going to use this 90 moving average line as some support. It did use it here, so I definitely think that it could be a perfect opportunity to make some money with this stock. Not to mention, you guys are going to be getting paid over $1 dividend just for owning this, so it's a beautiful yield, and there's definitely some long-term potential with this one. So the next one here is ticker symbol BMY. You guys can see that you guys get paid right around 45 cents every single quarter. Beautiful growth, really resistance at $70, support at 42. Really kind of just likes to trade in between it. This is what I would call a income stock. So the growth for this is kind of virtually none. The stock really just trades sideways, just consolidates. It consolidates up and down. And really with these, I think that you could use them to your advantage because you know the highs and you know the lows. So what a smart investor will do is instead of buying at all these extremely high price points, you just got to set some alerts, or you can use the strategy dollar cost averaging to get a good overall average price. What you do is you take a set amount of money. If you have $1,000 you want to invest in this company, instead of investing $1,000 right now, what you do is you spread out the monthly payments. So what that does is it gets a good overall average price for that time period. So if you take $1,000 and you want to invest, $100 a month for the next 10 months, you guys are going to get a good overall average price for that 10-month span. It's a perfect way to average out any stock if you guys are worried about buying into high or buying into low. Dollar cost averaging is a perfect strategy for that. This one here, beautiful yield and just kind of consolidates. The next one and final one here is PepsiCo. This one here has tremendous long-term potential, and really the stock is at 135. I do think a fair value is at least 140. You guys can see that is that old resistance. So meaning the stock has came in contact with it and we get sell off. Came in contact with it, we get sell off. So now with this stock coming in contact with this 90 moving average line, the stock loves to use it as support. You guys can see it's hit it here. Now it's hitting it here again. So what do you guys think is going to happen? I think we're going to get some buying pressure, and I do think that we're going to get a break above 140 here. So I do think that you get a perfect dividend growth for this. You guys can see over $1 dividend every quarter. Perfect income coming in, and beautiful upward trend. You cannot beat that. Everyone's always talking about that they're looking for opportunity in the market. And it's all about being consistent, looking at the trends, and making it your friend. That's all it is. It's very, very simple, nothing too complicated. And when a stock falls down like it does right here, this could be a perfect opportunity to pick up a couple of shares before it comes back up to those highs. Buy the lows, sell the highs. That's pretty much all you guys need to do. So that is it though. Hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Take care. Bam.